None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It's Friday morning. These weeks are going by too fast, I'll tell you. One thing that continues to happen, though, is we're seeing new highs. The history continues to be created. I saw an interesting article on CNBC this morning. I think it was Kramer, but I read about a third of it until I realized who was writing it, and I quickly stopped reading it. But it was actually was talking about why every time we make a new high, how risky it gets. And I guess I didn't understand that concept. So I guess that's the anxiety that we all have around new highs, and when is the next shoe going to fall, or when is the actual high going to be printed. And that's the purpose of this show, to have some perspective of what's going on with the market. So as usual, I'm going to bring Mitchell in over right now. And good morning, Mitch.
Good morning.
So, yeah, we were trying to look for something to talk about, and there's nothing going on.
It's just paint drying or watching grass grow.
Yeah, well, actually, grass is growing tall because it's getting taller and taller. We're continuing to see some follow through on the upside, and the markets are grinding forward. Low volume, low momentum. The VIX continues to fall. We'll go through all this in just a few minutes, but as typical, what we're going to do today is we'll do the first 15 minutes on overview of the indices, and then we'll get the treasuries and talk about some of the other items at that time. Probably hit on crude oil, since it's continuing to move along the lines that we talked about on Wednesday. So anyway, let's go ahead and get started on the markets here. And the first chart we got here is the weekly S&P, and you'll see that this pattern that I was discussing the other day is starting to unfold. ppm 123, 0.78, 0.44, and 0.37. So this thing just a couple weeks ago, it was still accelerating, but it was down at around 49. So it's just absolutely exploded, and that 0.79 represents about 3/4% per week on the 10-period moving average. So this is continuing to be, I guess, the driving force between of this market is this acceleration on this pattern. So we went sideways for 13 weeks. Now we're in our working on our 5th week and are coming into our 6th week of this next trend. And I guess if we were in Vegas, I would be considered a card counter. I'm always counting bars in the patterns. There's a bunch of patterns that unfold, and the 13 pattern that we saw was pretty much an extended pattern. Usually they're 5-3-5s or 5-3-8s, and sometimes you see a 5-3-13. And I've seen extended waves where we'll see 21 bars in one particular sequence. And the realities of all of this is that while there's enough variations, they get hard to predict. But this one here appears to be somewhat predictable in that it's probably going to be at least an 8-week, and the possibility of extending to that 13, which would give us another 3 to 8 weeks of this particular sequence. So much for sell in May and go away. That's not really working out real well, and it's almost an instant replay of last summer. We don't have the same kind of numbers that we had at this time of year as far as the percent gains and those type of things, but we certainly are seeing quite a bit of action. The other day I didn't really hit on this, but I wanted to bring this up. This is the differential charts between EFA and EEM, and like I said, we won't see a difference. This is the percent gain against the EFA, and you can see EFA just keep losing ground, and as does the EEM. So when these charts turn, this is probably going to start to show some shift in cash flow and some other elements that I've been watching for. For the moment, they're not doing that. New lows on both of these charts simultaneously. And then one of my favorite my favorite charts here is these cycles. This is the 5-minute cycle on this, and you'll see. Just want to make sure something here. Yeah, just want to make sure this thing was running live here while we're talking. But you can see these moves higher here in the last hour. We've seen a nice surge again to the upside, and we're just continuing to see this market stair step. I talked about this pattern on Wednesday, that it looked like it would accelerate out, and it did when Janet Yellen and the gang came out and we're talking about I guess their expectations for the economy. And we continue to operate on this weird thing with the Fed, where as long as they're saying the right things, it's okay to keep buying stocks, and this rally keeps going. And I wouldn't argue with some of the comments that I saw in the CNBC article that obviously one of these highs that we see will be the high of the market. At the moment, I still don't think we're close to it just yet. We have, I guess there's a possibility the 1973 number that I've been talking about could hit that number and show some sort of top at that level. You know, it's anyone's guess because you're operating in a no man's land. But when you start to look at one of the things we talked about on Mondays, usually on Market Thunder, is the actual rotation in the database and what the database looks like from the standpoint of what's occurring in there. And we're seeing a secondary rotation. This market continues to recreate itself. So if you just look at the indexes, like most people do, then they see one picture. We're fortunate enough to have 18,000, almost 400 symbols that we can look at and start to make an analysis of the trends, the internal trends that are happening on a stock-by-stock basis, and that's always really handy. That's been the thing that's given me the perspective. When you have all these new trends that have come out in the last 6 weeks, we've had a fair amount of new buying come in, and that gives a new life to the trend because all of those new buys have a new investment cycle. So BPM operates on the VPM investment cycle. So even though it might within a trend get in and out, it's actually when it gets out and gets back in, it regenerates. It has a whole new profile that it's set up and a new expectation for that particular trade. So it's not part of the continuous pattern that you're trying to connect the dots to all those trends, and it really doesn't work that way because so with 18,000 plus symbols, we can see a lot of this rotation that's happening, and we can also see shifts from the indexes on the individual sectors and all that. So maybe that's worth going over a little bit today to cover a little bit. This is the 24-hour futures chart here that we're looking at, and so we're not looking at any great numbers. I think yesterday, excuse me, let me grab my numbers from yesterday, but yesterday was up exactly what we're up right now is 250 points on the S&P. So it's just inching forward at a few points per day. So nothing real, I guess, huge there to talk about. Let's go back to the cash charts and take a look at, let's spin over and take a look at the daily graphs that we have here. And similar pattern, I talked about this new objective that was generated the other day. Let me just bring up the chart here. Let me move that over so you can see it a little better. And we're looking at these numbers of 2018, 2054, and 2076. On the intermediate charts, if you recall, we have the 1973 objective, and then we have the 2032, and then 2070, or it's 2034 and 2072. So there's a cluster of expectations that are happening above S&P 2000, and it's going to be interesting because every time let's go back to S&P 1600. We got the 1600, we got this crazy volatility. The market dropped almost all the way back down to 1500, then reversed, and then went up and it worked its way to 1700. We did the same thing at 1700, did the same thing at 1800, did the same thing at 1900. Every one of these even numbers have had the same pattern. And typically what I would expect to really get everybody leaning on the wrong foot would be for it not to work that way this time. Usually by the time you figure out a pattern, that's the end of it. And you know, sometimes these sideways patterns, you could have traded the range if you were a trader for 13 weeks when we were in that sideways range. Finally, when it broke that, if you remember that 1882 number, when it finally broke through that, that was it for the last time. And now here we are, not quite 100 points higher, but we're getting pretty close to it. So the patterns that are unfolding here are continuing to evolve. And this was a new objective that comes out. I think I talked about this the other day. We would have to get below this number here. I think it's 25. But let me just bring that back up real quick so I can. Yeah, so I've done it again. I don't have my glasses on. So now I can see. There you go. So yeah, it's 1925.80 is the key number on the downside. So if that was taken out, then that would be exactly that would be what would be necessary to negate the 2018. These numbers that are up here on the right hand side, you should be able to see 2054, 2076. So 2018 is the men number, and then the range typically we're going to get into is that 2054, 2078. If we go back over here real quick to the weekly numbers, you'll see that those same numbers here are here we are at 1973, 2034, and 2072. So there's a whole cluster of events that are happening on different levels. And I've talked about this before. There was something I said I was going to put up on, I remember on Wednesday, that I did not. Let me put something up here. I'm going to put up a, what I want to do is put a range finder real quick here. We're going to put the pattern finder 1 and 2 on here. And this is part of the logic in VPM, and you'll see that what it did, there's two lines. There's a white line and a red line. The red line's the bigger pattern, the white line is the smaller pattern. So what this does is it marks all the highs and lows, and so you can see the stair-stepping pattern. And this pattern that we've been going through has been pretty consistent, and once we get up to this next level, like I said, one of these patterns will be the top of this, but with the acceleration of 0.77, 0.48, and 37, not going to happen. And while we did take a breather from the SPY, like in some of the models, we did get back in week before last, and I'm sure just that little downtick made everybody nervous that this is, oh no, we bought at the high, but so far that isn't the case. And there was one of the things I talked about in VPM is the concept of adverse excursion. And so we had 1 week of adverse excursion before we were able to penetrate through the purchase price of the that was generated 2 weeks ago. And sometimes those can be 2 to 3 weeks. You're never going to buy things perfectly at the right time, but BPM's always trying to buy into that momentum hotspot that's going to help to keep the market going in the direction once it buys. Sometimes you'll see it buy and it just never looks back and it goes right up. So the decision that was made long ago when I was making these models, would I rather try to buy a low and be wrong, or would I rather make sure that I had a higher probability that the trend was in place? And so when we come into a lot of these trends, there's about 6 different locations where VPM is going to buy at the beginning of the trend, and it has everything to do with how the market is unfolding and the patterns that are unfolding at that point in time. It has nothing to do with figuring out where the low was. It has to do with the pattern, identifying the pattern, and how you enter into that pattern to bring that higher probability into the models. And even with all that thought process that went around that, certainly doesn't guarantee that every trade is going to work, but typically anywhere from in some cases we have seen 100% accuracy over multiple years, but for the most part it's in a 60 percentile range, but it doesn't have to be. Some of the best models are 40% right, but they have 3 and 4 and 5 to 1 win-loss ratios, which is where the ER ratio comes in. Anyway, but from let's go and take a look at the monthly graph. We're coming in, I don't know how that happened, but we're getting somewhat closer to the last 10 days or so of this month, which is kind of crazy. But same patterns here that we're looking. I've still got the pattern finder up there, so you can see these patterns that are being recognized. So this last little spike right here, where I put a cursor, that was where the last short-term mark was at, and now we've made a new high. So that this is stair-stepping as well. The big red lines you can see literally went from the 08 to 09 was the line there. This is monthly, and then you start to see these big steps. So it's very likely, and I believe I had discussed this in our annual report that we do in the beginning of the year, is that this was within a wave 3. I was expecting a wave 4. This little consolidation here may have been the wave 4 that, if I go back one level and go back to the weekly real quick, this sideways correction before we made this last high may have been the final wave 4, and this is completing, or they're trying to complete the wave 5 of this pattern. And there's a ratio when you're doing it, you're doing Elliott wave and looking at it, that if we went back to, let's go over there, go back to the monthly. When you get over here, this big move up here was wave 1, so that was from basically 660 to the S&P, let's see here, S&P 1200, so 600 points. So if that were the case, let me just bring this up, and wave 1 and 5 will tend to be equal in length. If that's the case, I hadn't really put this number to it, but let's do that for fun. The low is 1700, so that would be about 2400 on the S&P. So we won't get too far ahead of ourselves right now, but that would be where 1 and 5 would be equal if that's the case where we are. And typically in these type of patterns, we get some kind of ultimate parabolic move where the market just goes completely crazy, and everybody that has missed this market and had 19 different excuses why you can't buy the market all of a sudden decides it's okay, and that'll be the final run. So I don't know if we're going to get that type of parabolic move. We're certainly seeing the low volume and all of that. I want to go to one chart here because before we move on, is I want to bring up the VIX chart, which is at 1071 right now. Some months ago I made a comment, I think it was in a Monday commentary, that the top of this market wouldn't be in place until we saw a single-digit VIX, and we're certainly getting close to it right now. I don't know what the low was. Let me just look and see what the low was on the VIX this week. There it is, 1034. So we certainly got close to it, but we could see this thing really get low. If you're an option trader, you're getting murdered on vol right now on the volatility, and there's not a lot of juice out there to be grabbing and playing with. And but the bottom line is, when we look at these charts, I'm just going to take the strategy off real quick. Almost did. You can see, I talked about this 2 weeks ago. We got this little blip down, but this is a very bullish pattern. The daily has a little scarier pattern from the Webb's viewpoint, but overall there's some pretty good numbers underlying here that are going to keep this thing pretty positive. But the weekly pattern is what's been driving this market for some time, and I expect this will continue to be the case, and we'll see how we act if we get to 1973, and then if we get to the 2018, we'll continue to evolve with this. But for now, I don't expect anything different. What's going to be interesting is to see what comes out of the system tonight, to see if there's any rotation. A lot of times what will happen is the database will hit the wall. A lot of the patterns that are driving the market indices and are driving this market higher will end up owning most of them, and the rotation will become less and less. And I've talked about a 62% bullish level. That's the level I'm watching for, at least from a tipping point to tell me there's something bigger going on, and maybe that 2400 S&P would be possible. Then I don't know. It seems pretty crazy, I guess, but
that's up there. That's to say the least.
Yeah, but here's the thing: is that I remember when we were at 1600 and 2 years ago, almost 3 years ago, on 11, when I was talking about 1905, right? That seemed pretty crazy when we were 1300, right? So now here we are, well above that number and continuing on. So part of being a trend follower, by the way, folks, part of doing this the right way is being fearless and following the trend. Because if you bring in too much thinking, then it's going to cause you to take things off the table when you shouldn't be doing it. And certainly from the database rotation, everything I'm seeing, I don't see the fear. I've never seen in the past of the market just all of a sudden just collapse out of nowhere when we're buying both hands on thousands of symbols. It just hasn't happened. And there's too many trends breaking out right now outside of like a black swan, which, to be honest with you, everybody wants to call 08 a black swan. I mean, that thing was they had billboards down the highway telling you things weren't right. It was a long ways from doing a black swan. So I'm gonna bring Mitch up for a minute here. Yeah, so I mean, black swans are, I don't know, like a nuclear attack or something really bizarre.
Yeah, it was something out of the blue that nobody expected. Yeah. I find it hard to believe that either of the bubbles that came around were black swan events, because everybody knew that these companies, the classic, was it Pet.com?
Yeah, that's my favorite, actually. They had to sell 10 pounds of food to every dog in the country to make a profit.
Right. And so, I mean, that was the sign right there with the .com bubble.
Yeah, and
the
even
housing bubble. I mean, it just everybody was going into real estate, it seemed like. So
yeah, and like the .com thing, there was the real issue there. Really, it was pretty obvious. None of these, a good portion of the companies weren't making any money. And I had lived through in 1992 the biotech boom, and the biotechs were the same story, not nearly as big. But there was a time, I was on a Pacific Options Exchange at the time, where no one really cared what it was. If it was a biotech, they'll buy it, a brand new IPO, just like we saw in the .coms. They would just go crazy. The .coms were multiplied, what some of the craziness that we saw. And there was a guy named Brad on the trading floor, and he used to come up kicking chairs and screaming. He'd look at all the balance sheets. He said, these guys aren't making any money. They're all going to go out of business. And he was absolutely right. The problem was he was shorting them and getting murdered. They ended up carrying him off financially dead one day when he ran out of capital. And about a year later, he would have been right on everything he was shorting. He was. I remember telling him, I said, you're just getting in the way. You don't understand the sentiment on these stocks. They don't care. It says, oh, it's a biotech, I'll buy it. What do? Don't care. And that's how the market gets sometimes. So you know, so in the .com, they didn't care. Oh, it's an internet company, whatever. Yeah, whatever. I remember DoubleClick and all these crazy things. Is, you know, now they, you know, anyway. So it's just one of those scenarios. We don't have one of those going on right now, by the way. But what we do have is this crazy Fed thing that is kind of probably similar in a way that the market participants become very fearless. But the way it's going right now, I don't see them changing their ways. We've talked about this before. Every crisis that looked like it was going to happen and they pummeled these markets, you should have been buying both hands with all those. Every European issue, everything that you felt like you needed to stay away from, you should have been buying. And right. So right now, maybe if you're feeling like you should be buying, maybe that's another sign. But I don't know that anxiety has come into folks. I had CNBC on for just a short period yesterday, and if you look at the news stories, it's all about, you know, fear and why the market's could go down and all these things. It ain't going to go down when all those guys are on the tube. Oh, funniest thing is I saw Harry Dent on yesterday. That was hilarious because I mentioned the other day he's been bearish for like 6 years, and he was actually trying to defend himself that he's been right. It was laughable, and they were pretty much trolling him pretty good on the show. It was funny. I didn't feel sorry for him because he's just one of those perma bears that he just keeps talking about all the stuff, and he's got a reason why it's going to go down. Maybe he'll be right eventually. Actually, I forget this girl's name, Kelly something. She goes, you know, a broken clock's right twice a day or something. She was coming on him pretty hard, so it was pretty ugly. But
well, and with these guys, they could be right in their beliefs, but completely wrong on the timing. And
well, he's saying Dow 10,000 in the next year, so that's a 6,000 point drop. So that's a 60% drop in prices. So a little crazy, and he brought up some charts. Gutsy. Yeah, but that's how those newsletter guys live. Is they make these big calls when they're right. They go, "See, we told you so." He was talking about, and anyway, this is a crazy conversation to get off on. But he was talking about how he was right in like 1989. He talked about the .com bust or something. You know, like 11 years earlier. Somehow that was his call. Anyway, moving on here, folks. Let's go over and take a look at. I'm going to bring up just the market screen here, and let's go look at the, if I can find the right chart. None of these are the right one. There we go. Let's take a look at the treasuries real quick, and they are starting to move up again, and this is the weekly chart I have up here, and this chart is right on the edge of breaking out. I still don't think it's going to have a big effect if we move up into, I think we talked about the other day, the short term. Matter of fact, let's just bring it up real quick. The short term objectives here, there's a 278, I think, or something. Let me just bring it up here and we'll take a look at it. It's the targets are 270 with the extreme 275, 278. You know, that was the extreme. And so we're trying to move this up. Even today we've seen the market move up here to the 265, and now it's already backed off a couple of ticks. So there's still a lot of resistance. I've talked about this 264 to 268 level. Pretty heavy duty resistance, but it's very much so like the 1882 number that I talked about for 13 weeks, and every time we got up to the top we would come back down, and finally when we got through it went on a run. And I suspect this will be the case on these interest rates. We keep bumping up. There's not really any reason for them to go down. The Fed's continuing the taper, and the you know, we're just kind of seeing this pattern unfold in a slow motion way, in that it's doing this, you know, like right here, this let me bring up the whiteboard for a second here, is I think you can see this in a pretty obvious pattern, is that you can see, I'm just drawing an arrow through here, this little sideways pattern. it's very similar to what we did on the markets. Of course, we're coming off a trough here, so you're seeing this thing stair step, and I'm still expecting that ultimately you see, a range up here, 330, 310, and it's not until we get over the magic number is 303 at that level or somewhere getting close to it, then the markets will probably start to get nervous. Maybe at that point we'll be at some peak point on the S&P and the stock markets to actually indicate that maybe there's some other things going on. But for right now, I don't think that even getting into 275, 278, other than a day or two, that it's going to really matter. It appears right now that any news, all news, anything you want to say about the stock market is bullish. And that's going to continue to be the case right now. Market sentiment is very strong. I saw somebody talking about, I think when they had Harry Dent on or something, somebody was talking about 60-some-odd% of all the investment letters out there are bullish. And that doesn't make them wrong, by the way. It's just they're looking at that consensus. It gets too high, that when everybody's bullish, then somehow the market's going to go down. And that it can stay like that for a while. It's just like if relative strength is probably one of the hardest indicators from a technical standpoint, not relative strength from one symbol to another, but RSI as an indicator, because it's a 0 to 100 meter and it'll just get high. Same thing with indicator like stochastics, if any of you are doing technical analysis. It just gets up to the high levels and it goes sideways across the top and it just stays there, and it can stay at these extreme levels for a while, so there's no way to really tell when it's going to break using those indicators. All of the VPM indicators, the PPMs, are not 0 to 100 meters. They can expand as far as the market is showing the change. So it's more like a rain meter than it is some other type of meter that just gets full. It's a rain meter that doesn't fill up, I guess. It's a perpetual machine. So anyway, but from the interest rate standpoint, I still think that this is the scenario that we're looking at. And I know we've looked at this before, but this is the daily graph we're looking at. Intermediate, weekly is just sitting here, just ready to explode. And it's interesting, there's a whole ton of charts that look like this right now that are off the not stock related. You got this chart, you've got the gold chart. By the way, I made a comment on, I guess it was Wednesday, it was at 1270. I said this is like an extreme buy. That thing's already moved up 40 bucks since Janet talked the other day. There's still some scuttlebutt going on about potential inflation, but the gold bugs are always looking for a reason. I still think that that's going to be a good trade. So I think we're probably getting closer to even now, Mitch, on that GLD trade. So anyway, but yeah, so those things are continuing. Are you bringing that up right now?
Yeah, I'm looking it up right now.
Okay, yeah, so we got you on screen. So the bottom line is, those are the kind of things that are happening, and these patterns of the U.S. dollar, the yen, the treasuries, and even our friends GLDs.
Down 6% now. So
okay.
we've cut quite a bit off the losses that we'd had on this position.
Yeah. And you can see here a nice reversal this week on this chart here. This is GLD I just brought up real quick, and this is the weekly intermediate, and you can see this purchase. It's been long forever. In fact, it's even long in the tooth based on a trade profile. Why don't you bring that up real quick, Mitch, and see what how many days long it is of normal. I think it's like exceeded the average holding or something, if I remember right.
Yeah, right now it is. Get to the right section. Thought I had it pulled up.
Yeah, just click on that little T button.
I'm in the wrong system right now. So current duration is 201. Average duration is 133. So yeah. the longest we've held this is 251. So we're still a few days away from, quite a few days away from that.
Yeah.
But we're certainly past the average on it.
Yeah, I think that's probably going to be this probably one of the new historical holdings from the holding standpoint, anyway.
Yeah, this is on the 1.2 weekly, which is the optimized. The 3.2, I think, cut the losses on that a while back, and it was, I think, a loss of 2%, something pretty minor.
I got 1.2 on the screen, so yeah. So anyway, this at least this thing is starting to move up a little bit, and we're seeing some pretty good movement on the upside here. And yeah, so anyway, moving on. I guess we're probably time for the get into the stock of the day.
Well, let's kick things off. I thought it'd be good to talk about Amazon. They announced that is it the Fire Phone? Is that what they're calling it?
Yeah, I'm a gadget guy. I bought one yesterday. I get mine next Wednesday. So I have an AT&T account. So I thought, well, it looked pretty cool. So I have a backup phone that I use from my iPhone, and I'm canceling that account, and I'm going to give it a shot. So we'll see.
So what's the unique thing about it?
They've got this 3D viewing. It's pretty cool. It's like you're looking inside it. It's like actually it's 3D. They've got this visual stuff. I think you can do. Their camera's got a 14 pixel camera, something like that. It's pretty. Yeah, they got a bunch of stuff. I don't know. It's Android. I'm not a big Android fan, but I am a gadget guy, so I always like to have the new stuff. So I did buy that yesterday. I get the 64 gig, whatever they had, and but yeah, so Amazon market doesn't really care much about what they're doing, right? So we're down a little bit, 1.37%. Amazon, is this the right model we have?
3.2 is the trade system, and we're currently flat. I think both of them.
Yeah, so we'll go ahead and put that up there real quick, and. Yeah, so we're out of that right now. This pattern, though, is once again this stair-stepping down pattern. We're starting to set up a bottom. We actually have ppm1 at 0.34 positive. Then we have 0.92. So this cyan line is coming down through here is a 21 period moving average, which was down almost 1%. So these things are going to cross here, no doubt, and that's actually a pretty good sign. And then probably this stock, let's just take a quick look from a Fibonacci standpoint. Let me broaden this pattern out so you can see it a little better. It's above Mitch's head here, so he won't be in the way. We'll keep up like we are. But the pattern that appears to be setting up here is let me draw a couple boxes here, is once we hit this high here, we've got this 1, 2, 3 down, or an ABC. You usually get 1, 2, 3 like this, and then you'll have some other pattern that will even hold this low or go below it. Then that's where the ultimate low will happen, and this has been a huge screamer stock. We've had 3 trades in here, so we'll see how all that plays out. And but from this standpoint, we should see more consolidation. The stock could move up, and if we went over and left this same model here, and we just converted this over to a daily graph here, you can see that on the surge the other day. I don't know if it was pre-announcement of this thing or what, but they got we've got a similar pattern where a little ABC. The short-term objectives here that are showing up on Amazon are, let's see here, target at 374, and then actually 360, and then 374 to 383, and we're currently at 322. So those objectives will stay in place here, and as long as we stay above, looks like above this reversal day here, the low there, which is going to be 324. Actually, it could be negated. That may have already been. Yeah, it has actually. So this pattern today, when we drop below 324, you can notice there are no dots where I put the cursor. That would tell you that has stopped to be calculating, which is it's been negated. So right now we're just setting up this pattern, so there's no Fibonacci. We got negative 2 negatives on the ppm 1 and 3, and then ppm 2 is actually at a trend level that's right where the market's trading at right now. So this is typical. If you were to bring this up on BPM 20 and you looked at the support level, it would come up right now as a support level would come up as the 21-day moving average is 320.20. It's 321, and the low has been 320.41. So it's went right down to that number, which is pretty typical from that standpoint. So let's go back to weekly. Let's see what kind of stocks we have coming up next.
All right, next up on the list, how about Conagra Food? That's also on the 3.2 system, and this is also flat. CAG.
CAG?
Yes, sir.
Yeah, pretty ugly week for this stock. This is one of those patterns, though, that we're looking at. Bring up the whiteboard here. Yeah, so we've been out of this for a while. Over here's our exit long, and we've gotten this stair step. The interesting thing about this is from a correction pattern, we're getting what's called an ABCDE pattern, and I talked about this on Wednesday. We went over Decker, and this did the same thing where we're possibly heading back to the base where this rally started from. Stocks do this all the time. This is what makes them really much more dynamic and ability to generate more profits than you can with an index. You know, if you're indexing, you're indexing. You know, there's not a lot on there from that standpoint. So let's yeah. So this pattern is pretty much. Got my antivirus coming up here. Yeah, that's nice. At least we know it's working. But the bottom line is this pattern is pretty negative. The stock is down, but the reset on these stocks, if you get a good stock that trends well, even if it has big volatility is good when you come into utilizing VPM. You don't really want some stable stock and looking at dividend stock that just kind of crawls higher over time. You want these stocks that swing around, that move, and you want to be able to rotate with them within a screening process, and that's how you're going to generate some serious alpha in a VPM strategy, not having a bunch of stable stocks trying to find the least volatility. You want to have, I've always said at least a beta of 1.2, and you should have some 2s and 3s in there. You should have some stuff that can really rock and roll. So
one other stock I'd like to revisit, just the conversation of, is HSA or HSH for Hillshire. So as you recall, they were trying to buy out, one food company. Forget it now if it was Pilgrim's Pride they were buying, or if it was Pilgrim's was vying for them via Tyson. But at this point, it seems that the price has stabilized. They've had quite a few different bids in this whole process. So I was just wondering, now that we've sort of hit this plateau now since about a week or so ago, if you had any final comments when it comes to this type of situation.
Yeah, I just wanted to. This is interesting because I wanted to bring this up to see what VPM did. It actually issued a buy after that big spike. And even though it looked like it wasn't a very good idea, it actually hasn't been a terrible idea. I guess let's bring up. It's still up 17% since the purchase, even after price jump like we saw from 35, opened at 45, then closed at 52-ish, and then we bought it at 52, 53 actually, and then here we are up 17%. These are tough to play with. I would actually have a hard time doing this trade on this big gap. And,
yeah, absolutely. I would not have touched it.
Yeah, let me get me out of the way here, so I'm right in the middle of the chart here. But yeah, so it's unfortunate. This is 1-2 here. My bet is if I throw 3-2 on it, I'll do it. that we didn't get out of this thing during here. Let's just do it for fun. I bet you.
Yeah, 3-2 caught it perfectly.
Yeah. So here it is, right before the explosion. It bought it way over here. Let me move this up on the screen a little bit. Yeah, so it bought it here, and yeah. And what's the difference in the ER here? We've got 220 versus
173.
173. So what must be going on here in the model results? We always target the total net profit. So let me move this over.
Yeah, the truth be told, there hasn't been that many trades on this stock because it only existed for a short time.
Yeah.
In terms of most stocks.
Yeah, and that goes back to a conversation I think we had in Process Warriors the other day, is that, you really, what you really have to do is with these new charts, it's difficult to choose which model, because we need probably a good 4 to 6 trades to get a good profile, and we need some wins and losers in there to do it. And that winning and that's part of the ratios that you have to be able to do this. So anyway.
Well, on that same note, a fairly popular company, Zendesk, just IPO'd recently. Their ticker is ZEN, and I thought it'd be good to talk about what to do in the case of an IPO. We're going into the very first trade on this, where the system hasn't even determined which one is the optimized trade system at this point, whether it's 1.2 or 3.2.
It does have a position now.
It does have a position.
And so let's talk a little bit about this. And this is actually very unique from a modeling standpoint. There are very few models out there that can make a decision 1 week after this stock comes out. And one of the things that we do when a brand new symbol comes out, we seed the data so that we can run our indicators, so it can start to pick up on movement. If you look at just this chart here, I'm going to blow this up. I'm going to get us out of the way, blow this up a little bit and talk about this, because this, see if I can move this over just a touch. There we go. So you can see there's been 4 weekly bars, and underneath you see the 10, 21, 40 week moving averages. And if we go down, you can see that the PPMs are also just screaming up 1%, up 2 on the PPM2, and roughly up 4% on the PPM 1. And what VPM does, we seed the data so that it can, when it starts to see movement, it can make a decision fairly quickly. So I could probably have a better view of this if I wanted to do an IPO. I won't have, as Mitch pointed out, let's see if I can get this back in the world here. But if I go over to a daily model, and then you're going to see a little better decision process on these things. So if you do want to trade one of these things, you can see that it took on a trade right. Actually, there is no trades. It hasn't done anything.
It hasn't completed any of them yet at this point.
No. And so, yeah, you're just not. Yeah, but let me make this a little bigger so we can all see this. I'll toggle it over and then make it a bit bigger. And so you can see that it bought literally off the first bar. This actually happened when Google came out. It was a good idea. If you know something, let's say you want to, one of our longtime users going back all the way to 1999, still around, there was, when the IPO mania was going on, we were talking about the .com boom. Well, this was a really good way. You can put it on a daily graph and see what kind of traction it gets. This one here, it looks like we've got, just off of that first trade, you're up 28% on this IPO, and you have a sell discipline running. So, matter of fact, the call from this advisor many years ago was like, gee, I wish we could figure out how to model them right away so I could trade them and at least have a sell discipline on them. And it was around then where we came up with the idea of seeding the data. So we'll actually put in the first open price, and we'll put that same price back for, we need about 200 trading days to be able to calculate things. And anyway, so then what happens, as soon as the market starts to move, then we're able to buy it. So in this case, we bought the very first day IPO, and we're on. If this thing would have failed, it also would have sold out of it. So if you bought a bad IPO, this is one way to do it. I think it's the same trade even on 1-2, and 1-2 is going to be a little bit more aggressive. But you can see the PPMs are all calculated and everything is normalized already just here off of a few weeks of data. I don't know, what is that, maybe 20 bars here, I guess, and we're able to do that. So
yeah, and it's a similar situation even with a company like Facebook, which debuted last year, 2 years ago I should say, where if you look at it on the weekly 3.2 system, it still has an ER ratio of 0. And the reason for that is because it took on that first trade and is yet to sell it. But what's interesting on the trade on Facebook versus the Zendesk IPO is that you'll notice with Facebook we didn't get in it right away. I mean, that's a great example of where we saw the immediate trends. It was in a decline. We waited for about 6 months before we took on a trade on either of the two weekly models.
Yeah, so here we are. I'm just bringing that up. A long way to get there. But yeah, so we had, here's what Mitch is talking about here in the beginning of this. Let me toggle over here and make this a little bigger so it's a little easier to see. But here was the initial pricing. As you recall, it was terrible, failed IPO. VPM didn't do anything, and then bought it really well down at the bottom and sold it, and then was out of it. And I remember the talk around this stock wasn't very positive at the time. Then I guess this is when they came up with how to irritate everybody on their mobile device, and then it blew up. And then you can see here's the trade here that it made, and now it's back out. And just like in previous examples that we've talked about, the bring up the whiteboard, this is the same patterns that continue to flow out here. All right, my cursor decided to move away. Now I can't find it. Oh, okay, there we go. I know what happened. It's on my other computer. So yeah, so we get this initial move like this, and then it goes flat, and then we get the big breakout, and then now we get these little stair-stepping modes on the way up here. And then when this thing came down below these averages, the PPMs, everything was failing, it got out of that last trade. So right now it does not have a trade, and so the ER is 0. We talked about this on Tuesday's Warrior show, right? So it's 100 good. It's 100 because it hasn't had a loss.
Right, because there's been no losses for it to peg the win-to-loss ratio.
Yeah, so you can't get a win-loss ratio if you don't have a loss. Or
so the default is 100 if it's only has winning history.
Right.
Which I know some advisors, and I think we were about ready to touch upon this a little bit more in detail on Tuesday, is, well, at least you brought it up on Tuesday, an advisor only uses 250, but that's a skewed number in this case because we've only had 2 winning trades on it.
Right.
We haven't had the chance to see what any loss looks like. And then if you pull up the weekly 3.2 system, you see that we're still long that original first trade.
Yeah. And as because of that, there's no way, and the point is, there's no way to determine which is the big trade here. Let me see if I can blow this up so I'm not in the way. Wow, that was impressive. Yeah, so here's what we're talking about. Right over here is where this initial trade was. It's still in that first trade. Actually, there was 2 trades on 1-2. It bought down in the low here, then sold out, then rebought. It 3.2 only did this trade and is still in that trade, which is showing a profit of.
Right now on 3.2, it's 133%.
Yeah, 133%. So, if you come into an IPO like this, there's no way to tell which is going to be the better model. And
right.
What were the gains on 1-2 since we kind of got this deep?
1-2 has had gains. The first trade was 15%. The second trade was 46%.
Yeah.
So obviously, when we do lock in the gains, turn it from paper gains to real gains on the 3.2 system, that will be the optimized one the next time the system hits it.
Yep.
But we have to wait for that trade to come through and for the system to recalculate that.
Right. Yeah. So see here, are we getting on time? We've got maybe time for one more and then summary for the week. And off we go. We're still up 251 on the S&P. Nothing going on there. So what's our...
Well, we've been talking about technology. Let's wrap it up with HPQ for Hewlett Packard.
HPQ, right?
Yep. And that's optimized in the 1.2 system.
Yeah, see, 3.2's been long that thing forever. And we are, 11 days away from update of the database right now. So let's do... we should be on 1.2, you said, right?
Yes. Yeah, we're along both 1.2 and 3.2, but it is optimized to the 1.2 system.
Yeah, so a little more in and out. 1.2, as we've discussed many times, has about 20 to 30% more transactions than 3.2, and typically gets applied to a symbol because of a volatility issue or some type of pattern that it recognizes better with 1.2 than 3.2. In this case, that original trade looks like it's still long on 3.2.
Right.
Had it up there a minute ago, but the 1.2 was in and out and back in again. There's no real Fibonacci. The trend, though, let's talk about that. I'm going to get us out of the way here just so we can see this clear chart here. But ppm 1, 0.58, 0.89, and 0.107. So one of the things that I talked about when you start to see a trend start to consolidate or come to an end is that the ppm 1 will not be moving as fast as ppm 2. In this case, the strongest one is the underlying, which is the ppm 3, which is showing a 1.07 value, where the ppm 2 is 0.89 and then ppm 1 is 0.58. So those two moving averages are gaining, which is usually the beginning phases of the market, of the trend ending and the 10-period average starting to decline and drop through the other averages, which would be the 21 and 40. So that's pretty typical there. So
yeah, what's another thing that's interesting, as you mentioned, we've been in this trade forever in the 3.2. We're up almost 110% on that 3.2 trade. The net profit on the 3.2 is 269%. You compare that to the net profit on the 1.2 trade, which is 294. So the reason why at this point the 1.2 is optimized and squeaked ahead of it is because we still haven't locked in the gains on that 3.2 trade. When that happens,
so that probably won't be until year end, because unless it gets out here in the next few days.
Yep.
Yeah. So all right, folks, let's go through real quick. I'm going to go back in and we'll take a final look. Market's pretty much frozen where it was earlier. I'm not seeing. Oh, I know. Today is quadruple witching, isn't it? Oh. Yes. Let's see. We're going to September off of there. Look at this. This will actually light up this chart. And now we've got real trading going on here. So while I'm doing this, I'll keep that going. But yeah, so that's why all of these stopped moving on me. Yes. I thought, wow, that's an interesting spike. Looks a little different. That was the last trade early this morning on the expiration. So anyway,
and this happens 4 times a year, right?
Yes, and a lot of times you'll see some last hour window dressing or the first hour. It looks like this was the spike as we came in the expiration, and there's no other nothing else is going on there to get that. So that certainly is. I'll save that so that doesn't happen again. I thought it was kind of odd. I kept looking at that not moving, so that would explain everything. Just like I said, the looks like in doing what I did, I lost my cycles. That's kind of disturbing. I wonder how that happened. Anyway, so in closing, markets at 1962, the patterns that are up there look like is probably going to remain stable. There's a little potential right now, just looking at these things, for some downside into the close, but not very much. Chances are, I mentioned this in commentary, anything over 1947.40, which would be a 20-point drop from here, just about, would be positive for next week. It's almost impossible to negate any kind of positive forward-looking mode on this. So anyway, another week under our belt. Looking forward to see what comes out of VPM tonight as far as the rotation goes, all of that stuff. We're really looking, to see what happens. Do you have any final thoughts here, Mitch, for the week?
No, looking forward to the weekend.
I was going to say, besides, thank God it's Friday or TGIF. But anyway, folks, as always, we appreciate it. We're continuing to do our best on these shows to bring you some real perspective on what the markets are doing. So have a great weekend, and we shall talk to you on Monday at noon Eastern Time.